Hey gang, thanks for coming by my channel again. It's Anthony Carr with Remax West End, Anthony Carr Associates. And today the question I get a lot is from sellers, how much capital gains taxes will I owe when I sell my house? So this is a really good question. It's going to affect you if you're selling your house and you've been in it for a while and now you've actually got some capital gain that you're going to have here. And so let's explain what capital gains is to start with, okay? Income tax you pay on gains from selling capital assets, of which your house may be one of those. So we're going to talk about that very quickly and what that means. And before I get too deep in here, I want to let you know this is based on information from 2022. Some of the parameters of how they're taxing and who they're taxing has changed in the last few years. Got some information from realtor.com and from nolo.com. I'm not an accountant. I'm not an attorney. I am an agent that sold a lot of houses, and I get this question, and so I refer them to these, but I've gotten enough recently again that I think it was time to do a video on. So that's where I'm getting this information. Just so you know, most homeowners pay zero because the trigger points in income on the capital gains is not enough to make you have to pay on that. So just bottom line, most pay zero. But you have exemptions of your gain that we're talking about. You buy a house for $300,000, you sell it for $500,000, $600,000. You get to keep some of that money without paying capital gains taxes on it. But there are some provisos. Number one, it's your primary residence. Number two, you must have owned it at least 2 years. And while you've owned it, you've lived in the house for 2 of the last 5 years, and you cannot have taken the exclusion in the last 2 years. Now, the 2 of the last 5 years means you could have moved out of the property and rented it for 3 years, but in 5 years, you lived in it for 2 years. If you're a single filer of income taxes, your exemption is $250,000 for each homeowner. If you're married filing jointly, it's $500,000. So you buy it for $300,000, you can sell it beyond $800,000 and still have no taxes that you owe on that, okay? So let's start with the calculation. You start with the base price of your property that you're going to report. And the base is what you acquired the property at. So let's say, for our example, that you bought this property for $400,000. But you also get to add on some things. Did you make any major improvements? Did you put on an addition? Did you put on a garage, remodel kitchen, a deck or a room, things like that? These are not like I fixed the water heater or I installed a new HVAC because it was going down or I put in a new roof. Those are not add-ons that add to the basis. That's just maintenance. But these are things that here on this list that you did that increased the basis. So let's say over 15 years or so, you put $100,000 into the property. So you bought it for $400,000, $100,000 in improvements. It now has a new basis of $500,000. Okay, now we look at what the sales price was, and we're going to remove all of those basis expenses. So your sales price is $800,000, let's say after about 15 years, but you get to remove your closing costs. I'm using 7% here to include your commissions, your taxes, your transfer fees, all of that good stuff. So we're going to remove $56,000, and that brings your proceeds to $744,000. Okay, now we remove the basis. Okay, we're going to remove the basis, and you now have a capital gain of $244,000. So in this case, no one owes any taxes. Okay, because if you're single filing, you don't hit the $250,000 threshold. If you're married and filing, you obviously didn't hit the $500,000 threshold. So you can see that you double the value of the property that you sold from $400,000 to $800,000, and you're still not hitting a capital gains. But the question for folks is, well, what if I do hit that $250,000 or that $500,000 bracket? What do I do then, and what's my rate? Keep in mind, you've got a threshold you have to hit, and let's say it's $250,000, and what you got was $290,000. Your capital gains is going to be on the amount over $250,000, and then it's about your earnings. So if your earnings as a single filer were less than $40,400, your capital gains tax rate is 0. You're still not paying anything. For married filing jointly, if you earn less than $80,800, you're at 0. And if you're head of household earning less than $54,100, you're at 0. So we see that the capital gains really doesn't kick in until you've hit the threshold on the capital gains amount and you have a certain earnings amount. Now, on the first point of capital gains tax rate at 15%, there's a really wide spread here that you've either made $40,401 up to $445,851. So you can see that the people that are paying capital gains on the sale of their property, this is the big piece right here. Okay, is most people are in this bracket here. Married filing jointly, $80,801 to $501,600. This is where most of the capital gains tax rate is going to be, is at 15%, because most people are underneath those high earning levels. The head of household earning between $54,101 and $473,750, they're also included in the 15%. So let me explain how this happens. You sold your house, instead of $800,000, you sold it for $1 million. Okay, and let's say your capital gains was, after you take off the $250 or the $500, your capital gains is $100,000. Okay, so you actually got $600,000 more for married couple than you got when you bought it. So you're over $600,000. You remove the $500,000 exemption, you're left with $100,000. You owe 15% of the $100,000. Okay, now, like I said, I'm not an accountant, not an attorney, but this is a general, 10,000 foot look at what you're going to owe. So understand how that works. Then, if you're in the mid 6 figures earnings, you're over $445,000, 851 as a single filer, you're over $500,000 for married filer, then you're at 20%. So let's use the same scenario, and your gain is $100,000 because you exempted that $250 or you exempted that $500,000 gain. You keep the $500, you keep the $250, but now you owe taxes on that $100,000. If you're in this earnings level, you now owe 20%, which our example of a $100,000 gain, you would owe $20,000. And then the head of household, if you're earning over $473,750, then you would be hit with that higher capital gains level. Hope this has been helpful to you. Again, just use this as a real quick education video. When you get to the nitty gritty, you want to talk with your tax professional. But thanks for coming by. If you like this video, share it, like it. It helps my channel, helps me out. If you got any questions, leave them below. And thanks so much, and I hope you have a great day. Bye.